The guys from Safe Harbor Financial Services are joining us this morning on Studio 10. Good morning, everyone.
Good morning, Joe.
Jim Bird, you're back with us again and introducing some of your team members today.
Yes, I have Richard Lindsay, my CPA with Z-Back and Lindsay, works with me, does radio with me, and also seminars. And I have Justin Struble, which is our financial strategist. Justin has a engineering degree and by trade, so he's also an intern with me and runs a Mississippi operation. And
also you have authored a book. Tell us briefly about the book, and also Justin had a little bit to do with this book as well.
Yeah, well, we were honored to have in this book to be able, they asked 7 financial advisors across the country to contribute a chapter to the book, and Justin and I were asked to do a chapter in that book, so we're honored to have that. It's primarily by Dan Kennedy, world-renowned marketing guru, who actually did the book, and so we had a part in that. We're glad to have that.
It's called The Ultimate Success Secret. Check it out. What we want to talk about this morning is guaranteed income. Why is guaranteeing your basic income a mistake if you do not do this?
Well, you know, the money that you need, Joe, for your, you know, we call it bread and butter money. Money you got to have to live on, pay the bills, has to be in something safe and guaranteed and insured if possible to do that. I find that most seniors now, they look for safety in their money. They want something that can give them some growth, but they, you know, they don't want to see wide market swings in their money. They can't afford to lose their money, you know, because it's got to last a lifetime, and people are living longer. So, you know, you got to expect for that money to last the rest of their life, and we've come up with some plans that can do that for people. Give them guaranteed income for the rest of their life for both spouses, and the money will grow, and they'll try to preserve their principal at the same time, and that's very important to people, because they want to leave it to somebody, or they just want to, you know, just don't like seeing their money go downhill. I had a couple in the other day, and you know, they were in 2008. They lost a lot of money in the market, and they said that, you know, we're taking distribution from our money because it's qualified money, and they said that, you know, we've never regained what we lost, and we're tired of that, and we don't think we ever will, because I think it's going to be another decade of down market before it gets back up, and people just can't go through that.
Well, let's talk about that a little bit. Say you're looking at your retirement assets and they're diminishing faster than you expect. What can you do in this situation?
Well, there's several things you do. You can shore up your money in some safer investments, manage money, for instance, if you need to keep it liquid. We've got some plans that they're paying 5 or 6% right now and keeping the money very liquid. But for your guaranteed income, you've got to look at, in this environment, at hybrid annuities. And hybrid annuities is one of the best places in the world that you can build a guaranteed safe income, earn very high interest rates during the accumulation period on that. What you give up for those is liquidity. So, you know, it's a give and take, and you got to give up something. You know, you got to give up safety, you got to give up growth, or you got to give up liquidity. Most seniors are willing to give up liquidity to get safety and growth in their money, and that's what we're showing to our clients, and they're loving it. Joe.
What if someone out there is wondering if a traditional IRA is a good thing to do at this point?
Well, you got to think how an IRA is structured. You know, when the IRAs were first introduced, you know, they were tax deferred, and you got a tax deduction on the money you put in there, and it was great because you thought that when you would draw the money out, you'd be in a lesser tax bracket. But that no longer holds true, because the taxes are going up. They're going up again in January, and so people hate to take that money out. And they say, man, can we do anything about it? So, you know, we have shown people some alternatives, some things they can do to, you know, to not have to pay his taxes. And I coordinate that normally with Richard there, because he's the CPA. The best way to take that money out, you know, is tax advantageous as possible.
Well, I'm sure a lot of people have a lot of questions about what we're talking about and would love to talk to your team more about these things. How can they contact Safe Harbor Financial Services?
Well, my number is 625-1226, or if you're outside the area, it's 1-877-251-1984. Go to our website, jbird@safeharborfin.com or safeharborllc.com, and you can read about us. My book is actually going to be online now. They can go and read that, and they can come to one of our seminars. And I want to say this quickly, Joe. Our seminars have been so well received. We've just had overwhelming success. Waiting list on our seminars. The response has been great, and I don't know if it's just people looking for advice out there, or seeing us on the shows or whatever, but we're glad it's happening.
Well, that is great news. Everybody wants to take part in one of the seminars, learn more, and of course you can talk to the gentleman in the various ways that he mentioned, by phone and on the website as well. All the information is on the Studio 10 webpage as well. Thank you all so much for coming in this morning on Studio 10.
Thank you, Joe.
And we'll see more of you in the future.
Thank you, Joe.
All right.